Welcome to Readact TV. I'm Don Friedman, President of the RIA Digital Assets Council. Today we have Bart Stevens, co-founder and managing director at Blockchain Capital. Bart, welcome to the show.
Don, it's good to be back with you. Thank you for the opportunity to speak with you today.
Great. First question we have for you is, if a financial advisor is thinking about investing in Bitcoin or blockchain, what three questions do they need to ask first?
I think a financial advisor should ask their clients really what the motivation is. So are they worried about inflation, for example? A lot of people in this day and age with the unorthodox policies being pursued by central bankers around the world are worried about inflation. And historically, investors have really only had one place to hide, and that's gold. For many people, including us at Blockchain Capital, we really see Bitcoin as gold 2.0. And so that's one question. What is the motivation around a client considering allocating some capital to crypto assets? The second question I would think would be around risk. Crypto assets and blockchain technology are new. So blockchain technology is an emerging technology industry. It enables a new emerging asset class that we call crypto assets. Therefore, these are speculative assets in nature. So they should not be in the fixed income or cash part of a diversified portfolio. They should be put in the risk bucket, something equivalent to a NASDAQ tech stock. And so that would be number two. What is the risk profile of the client that's considering that? And I think the third question that should be considered is really around active versus passive strategies. So an active, knowledgeable market participant, like a crypto investment firm like ourselves, might have favorite names that they like, other names that they avoid. What we've seen in the asset management business over the last 30 years is that the slow progression of passive strategies over active strategies. And so a financial advisor might want to look at something like the Bitwise Top 10 Index, which holds the top 10 crypto assets. That's a very low fee way to get diversified coverage to the large cap crypto names.
Excellent insight. Thank you for that. Next question we have is, advisors new to the world of digital assets immediately think of Bitcoin. However, there's a lot more to digital assets than just that. So can you share with us what else should advisors be aware of?
Yeah, that's a good observation. Bitcoin is without a doubt the tallest tree in the forest. And it is the granddaddy crypto asset. It is approximately 67% of the total market cap, if you will, of all crypto assets. And as I referenced in the first question, really for most investors, Bitcoin is kind of a gold 2.0 type asset. So it doesn't have the thousands of years of history that gold does, but I would argue it has a lot more utility. Some people do use Bitcoin for payments online, or you can put it on a memory stick and travel somewhere with it where you can't do that with a couple of bricks of gold. And so yes, Bitcoin is the largest, most established, but it's really playing this role as kind of gold 2.0. The second largest crypto asset that is experiencing a lot of important catalysts this year would be Ether, or the Ethereum blockchain ecosystem. And what we've seen in 2020 is an inflection point on two different subsectors of crypto assets that are both primarily riding on the Ethereum blockchain. The first subsector where we've seen explosive growth is the rise of stablecoins. Stablecoins are optimized for payments because, as the name suggests, they're pegged to the US dollar. Examples of stablecoins would be Tether, Coinbase and Circle have one called USDC, Paxos has another, and the granddaddy of them all that should launch maybe in the next year would be the Libra project, spun out of Facebook. But most of those stablecoins right now are on the Ethereum blockchain. The other area of really parabolic growth, especially over the last, call it 3 or 4 months, would be DeFi. And DeFi stands for decentralized finance. These are new financial protocols that allow for financial services and products that you couldn't offer to the world without these blockchains. And these are things that offer borrowing or lending or derivatives or smart contract-based insurance. And again, most of this innovation that we call DeFi is occurring on Ethereum. And so for an investor that is looking for maybe a larger cap, safer, inflation-protected crypto asset, that would be Bitcoin. For someone that is looking for a little bit more of an aggressive growth profile that captures this DeFi momentum and also the rise of kind of stable coins, Ethereum might be a good choice to consider.
Well, Bart, thank you so much for sharing your thoughts, and thanks for being our guest on Redact TV.
Happy to do it. Thank you for having me on, and I look forward to next time.